Denver's housing market feels calm right now. That's exactly what makes this moment dangerous. Under the surface, pressure is building, and by 2026, we could see prices jump by 10 to 15%, maybe more. So if today feels balanced, why are so many experts warning that prices could explode in 2026? Let's look at the forces that are building under the surface. So you may ask yourself, why could Denver explode in value over the next few years? The Denver metro area is expected to add 1.2 million people by 2050. There's a lot of relocation and demand from Californians, people on the East Coast, and remote workers that continue to try to live where they want to live. And the mountains are our biggest attraction. And so on the overall picture, builders are not keeping up with the long-term demand that our population size is demanding. And so as they continue to fight through regulations and restrictions on building, and also fighting through zoning laws and costs that limit their supply, they're still not keeping up with that long-term demand with our population size that we have in our market. Also, homeowners are sitting on record equity, so keep that in mind. And there's about to be a huge transfer of wealth from baby boomers that are now in their twilight stages, passing along a lot of their equity and wealth to the next generation. And that next generation, most likely, because they have a strong foundation and belief in homeownership, is going to want to put that into real estate. And so you may see a spike because of the increased demand of that next generation, and also the first-time buyer generation that has been struggling for the last 4 or 5 years, that is now getting to a more comfortable space where they can actually consider buying a home financially. But before you assume that prices are guaranteed to skyrocket, let's talk about the risks that could slow things down. There's always a worst-case scenario that could happen. And, let's say mortgage rates just stay high and, go back up to 7, 8%. If rates stay above 6.5% to 7%, affordability definitely tightens, and that becomes a slowdown in the market. So while the long-term fundamentals are strong, there are short-term risks that could keep prices from running away too quickly. So what does this mean if you're a buyer trying to time the real market? So if rates normalize and prices increase 10 to 15% by 2026, by 2030, affordability could be out of reach for many buyers right now. These prime areas in Denver will likely pull away even further, and entry-level homes, which are under $500,000, are already scarce, and that market could absolutely vanish and go away. Bottom line, if you wait for prices to prove you wrong, you may be waiting a lot more.